Okay, so this is problem number 4. I'm not sure there's sound to go along with problem number 3. I hope there is, but I'm sure y'all will let me know if there's not. But hopefully I wrote things out enough that you can see what I did. Let me know. I can record it again if I need to. All right, problem number 4. The trial balances of Charles Company at subsidiary Leto Incorporated are as follows on December 31st of 2017. All right, so that's December 31st, 2017. On January 1st of 2015, Charles Company exchanged 20,000 shares of its common stock with a fair value of $20 per share for all the outstanding stock of Leto Incorporated. Fixed assets with a 10-year life are understated by $50,000, and any excess of cost over book value is attributed to goodwill. The stockholders' equity of Leto on the purchase date is as follows. So this is on January 1st of 2015. All right, they want a schedule of determination and distribution of excess, and then the consolidated statements, including the income statement, retained earnings, and balance sheet. Don't have to do a worksheet. Okay, so we did 20,000 shares of common stock with a fair value of $20. There's no NCI. It's all this. I'm sorry, this determination distribution excess I just copied over from number 3. All right, so they had 50,000, 15,000, 35. Okay. So there's that. This is going to be fixed assets. $50. So that means goodwill has to be $150 to make it balance out. All right, and then this is going to get depreciation. It'll be the 50,000 divided by the 10 years. Okay, so I need to keep that in mind. All right, now we just need to do the financial statements. So we'll do the income statement first. I want to do them. Guess I'll just do it right here. So Charles Company and Leto Inc. Consolidated income statement creating for the year ended December 31st of 17. Okay, so let's see what they had here. They have revenues. $460 plus $210. They have expenses. That's going to be the $450 plus $170 plus the $5,000 of depreciation. That is consolidated net income, and we don't have to split it or anything because we own them 100%. Can make this look pretty. Not going to spend a ton of time recording myself doing this because y'all can do that. All right, so there's the income statement. Next up is the statement of retained earnings. Go ahead and do this, and then I can copy it, and the statement of retained earnings will already be ready. Just gonna keep going down, I guess. All right, this is the consolidated statement of retained earnings. All right, we know it all, so we don't have to worry about ours. However, we use the cost method to account for the investment. Does it say that somewhere? Well, it says it right here at the in the title. I don't know where it says it anywhere else. Well, one way I would know that they're using the cost method is they don't have any sub income here. So since they don't have any sub income, then I know they're using the cost method. All right, so our retained earnings are just going to be the retained earnings of Charles. But also you pick up the change in retained earnings from the beginning of the investment until the end of this year. So at the beginning investment of Leto, or however you say that. So at the beginning of the investment, they had 135,000. Now it's 170. So I need to pick up that extra 35. This is Leto's retained earnings at end of 2617 minus the 135, which is L's retained earnings at 1,115. So equal 7. It's 170,000. It's 135,000. Gosh, what did I do? This should be a minus. Dude, it's not 1,040,000. What was I looking at? I was looking at paid in capital. It's 230,000. Sorry about that. Okay. Add consolidated net income is 45,000. I'm not going to subtotal. I'm just going to subtract out the dividends. All right. These dividends were paid well, these dividends were paid by Charles the parent, so they went to outside parties. So make sure you subtract them out. And that is retained earnings at 12/31/17. And this is what it would have been at 1/1/17. To do balance sheets. I don't know if this will work out, but I'm going to copy it anyway. Go. Killing me, buddy. So this is the balance sheet. It's just the date. Alright. So we have current assets, depreciable fixed assets, accumulated depreciation. Don't need the investment. That's not going to show up at all. And then we have goodwill. We have goodwill. We need goodwill. All right, current assets are going to be $590. It's $130. Depreciable fixed assets are going to be the $1805. Plus $440. Plus this increase in fair value of $50. So I'm actually putting the inside column. That's why I moved that current assets over. Okay, and this one's going to be $405. $70. It was 2015, 2016. And 2017. Well, the answer only has another 5 coming out. 5 being added. Didn't they do this in 2015? So it should be 2015. I personally think it should be 15,000. But let's see if this balances out. And then goodwill was 150. Liabilities and equity are next. Liabilities. They just have liabilities. Liabilities of 900. 225. Equity is going to be common stock of just Charles, paid in excess of just Charles. And retained earnings. That's going to come from above. It ties out, so I guess they're right. I'm just added in the 1 year. I don't know. That seems fishy to me, but anyway. That's basically it for this one. All right, is that what we had to do? Yes. All right, so that's it for that one.